Welcome back. It's now time for Three Stock Lunch. We're sipping on some of today's biggest movers to the downside. Ford lower on a downgrade to sell at Deutsche Bank following its Q4 miss and operational shortfalls, quote unquote. Starbucks lower after weak international demand hurt its latest earnings. And Match Group is lower after announcing it is laying off 8% of its workforce. Here to help us trade all three is Victoria Greene. She's CIO of G Squared Private Wealth and a CNBC contributor. Victoria, great to have you on. Let's start with Ford.
Yeah, I'm selling Ford. I don't want to touch it right now. I think it's reversing back down to the 11. They're stuck in this operational hell. The CEO even admitted they left $2 billion on the table. They're looking everywhere for cost cuts. But here's the problem. They're going to have more costs with the EVs. They're having to take price cuts to keep up with Tesla. And I just don't think they're going to get it done in Q1. So this is a sell for me. Their chart's ugly. They bounced right off of a Fibonacci level, coming back down to 11. So I'm selling it.
Sell on Ford. Let's move on. What are you seeing in Starbucks these days?
Starbucks was all about a China story. They had a 29% decline in Chinese sales, but 30% of their stores in China were closed during that period. So I think we'll see China reopening. We're going to see that pick back up. I think the stock has good legs. It could leg back up to the highs around 126. I think they have strong leadership right now. They've got ways of growing revenue. The average spend in the U.S. is pretty strong. They're working on keeping a cap on labor costs, but I think right now this is a big play on China reopening. And for me, I think it's going to get it done, and you're going to see those revenues normalize. And we'll see that 15% growth that they want to see.
Yeah, and of course, meantime here, people will pay more for their Starbucks. Final name, Match Group.
Absolutely. Now, apparently people don't want to pay more for Tinder. I think Match Group for me right now is a sell. Their chart is super ugly. Their players, they don't call them users, their players have actually declined a little bit. And I think they're going to see cannibalization between Tinder and Hinge. Tinder is still the #1 revenue source for them, and they're about to launch this big marketing campaign. Never done it before. Could be a huge spend of money with not a lot of pickup. So for me, I think Match is just mired. Their margins aren't as good as Bumble. They've got a high debt load, and their chart, just for me, they're pretty stuck right now. So for me, I just can't buy it.
All right, Victoria Greene, thank you.
Maybe if she had a few more of the cocktails, she'd have changed her mind on Match Group there. I don't know. Whatever. All right, Victoria, thank you very much.